So today we're talking bookkeeping best practices for effective clinic operations. A little bit about me. My name is Omar. I'm the co-founder and CEO of a company called Enkel. We're one of Canada's leading financial operations firms. I have over 15 years of experience in Canadian tax, strategic planning, audit advisory, and finance operations. And prior to starting Enkel, I worked with a large accounting firm, KPMG, and also with BCAA. I have a BBA from Simon Fraser University, and I'm a qualified chartered professional accountant. So excited to be here today. I'll tell you a little bit more about Enkel. So I started Enkel in 2016 really with a simple problem in mind. And that problem was that you can't build a great organization without good books. Fast forward to today, that thesis really hasn't changed. We have about 300 clients across Canada, 80 team members with what we call a global delivery model. We focus on financial operations, not advisory, tax, and assurance work. It's the stuff that keeps your business moving throughout the year. I'd like to acknowledge that our offices are situated on the unceded traditional territories of the Musqueam, Squamish, and Tsleil-Waututh nations. A little bit more about what we do. So we provide financial operations services that include all of these items here. So bookkeeping, payroll, accounts payable, accounts receivable, controllership, and CFO services. I'll spend most of my time talking about bookkeeping, a little bit of time talking about payroll, but potentially all of these services would be relevant for your business. In terms of agenda for today, we're going to start with understanding bookkeeping in clinics, common bookkeeping challenges, bookkeeping tips for effective clinic operations. I will tell you a little bit more about one of our clients, Nose Creek Physiotherapy, and then we'll get into a Q&A. So let's start with understanding bookkeeping in clinics. Why is it important? And really, first and foremost, and if you do bookkeeping for nothing else, you need bookkeeping in order to file corporate taxes and sales tax returns accurately and on time. That is a bare minimum. You are required to file your taxes, and in order to do so, you need bookkeeping records. Bookkeeping is also important for accurate financial tracking and profitability analysis. Bookkeeping can ultimately tell you if you're making money or losing money. It can help you with cash flow management, cost control, and financial transparency. And this final bullet point here, financial transparency, is particularly important where you're in a practice with multiple partners. Some unique aspects of bookkeeping for clinics. So we work with a lot of clinics, and these are really the items that kind of stick out the most, that we come across the most, that are a little bit challenging. Tracking multiple revenue streams, sales tax filings in Canada are particularly challenging due to exempt and non-exempt products and services. The billing is reasonably complex. Insurance claims management, regulatory compliance and privacy, and I'll talk a little bit about this. Patient account management, really just handling a high volume of transactions, and some clinics carry inventory. In terms of regulatory requirements for clinics related to bookkeeping, privacy and confidentiality is something that you really want to be on top of. Patient data is held to a really high standard, a higher standard than a lot of other forms of data, so you want to be careful here. Billing and insurance compliance and financial regulations. Let's get into some common bookkeeping challenges that we see. So handling large volumes of transactions, of course, is an issue. That just means that your bank reconciliations are going to take longer, there are more questions, and there are more things that can go wrong. Managing multiple revenue streams. Many clinics, when we start working with them, they put everything into one line, just revenue. But if you're managing multiple revenue streams, it is important to measure what kind of revenue those different streams are bringing. That can create some challenge. Dealing with insurance claims and reimbursement. So of course, you may not get paid from your client. You may claim the visit from the insurance company, and that money may not come for some period of time. Ensuring compliance with healthcare regulations. I won't spend too much time in this area, but that's definitely something that can create some challenge. And preventing and detecting fraud. There's never a perfect solution to being able to prevent or detect fraud, but it's always important to consider in bookkeeping. Some bookkeeping tips for effective clinic operations. Let's jump in here. So you need to implement a systematic record keeping process. That is really key for your success on the administration front. You want to develop standardized procedures for recording financial transactions. It's really important that you have a systematic way of doing things. There are many things that can go wrong. Really document those processes and those steps so that your team understand what they need to do on an ongoing basis. Maintain a consistent schedule for updating records. Have it in somebody's calendar. If they need to be reconciling the bank or they need to be posting expense transactions, have it done either daily, weekly, or monthly. And to some extent, the frequency will depend on the size and scale of your operations. Ensure all staff are trained on record keeping protocols. What are your expectations as a clinic owner or manager? Store financial documents securely, both physically and digitally. Of course, wherever possible, digital is always the best. Implement checks and balances to prevent errors and fraud. And just a key comment here is that when you have one person that's capable of doing it all, paying the bills, recording transactions, your risk of fraud, of course, increases. Utilize bookkeeping software and tools. Since we started Enkel, we've worked with a lot of different applications. And really what we've found to be best in breed tools for this industry are these tools that I have up on the screen here. So you want to choose proven software that's really tailored for clinics. Utilize features like automated invoicing, expense tracking, and payroll management. Regularly update the software to benefit from new features and security improvements. Leverage reporting tools to generate financial statements and analytics, and provide training for staff to maximize the software's capabilities. If you go with something like any of these tools on the screen, there are, of course, a lot of really great resources out there that you can use. Reconcile your accounts regularly. So at a minimum, all clinics should be reconciling their bank accounts monthly. That's their bank and credit card statements. And petty cash, if you have to have petty cash, but try to avoid it. Compare recorded transactions with bank statements to identify discrepancies. Investigate and resolve any discrepancies promptly. That is the value of a bank reconciliation. If there are gaps, make sure you ask questions. Reconcile your accounts receivables and payables to ensure accurate recording. Both receivables and payables are an area where things can go sideways. And schedule regular reviews of reconciliations to maintain financial accuracy. Now, your clinic may grow to a size where you have other people doing the reconciliations. You may have a third party doing it. I strongly suggest checking in on these from time to time, not only making sure that they're done, but that they're done properly. Track expenses and revenues accurately. You want to categorize expenses and revenues to understand spending patterns and profitability. Make sure your chart of accounts is set up to help you measure what matters. And this varies by clinic. You want to measure revenues and costs by service or product line so that you can understand profit margin in each key area of your business. When we work with multidisciplinary clinics, we really try to help our clients understand what the profit margin is by different service. Keep receipts. In Canada, you are required to keep receipts. Now, the Canada Revenue Agency will accept scanned copies of receipts. The application that I was speaking about on the previous slide, Dext, if you store your receipts in there, that is considered a CRA compliant option for managing receipts. Use separate business bank and credit card accounts. I have this bolded and underlined, and if I want you to take one message home today, it is this one. You have to use separate business bank and credit card accounts, no matter how big or small your business is, or doing bookkeeping is a complete nightmare. Even if you are really small, you may not qualify for a business credit card. That's okay. Use a personal credit card, but have it 100% used for business purposes. Don't commingle it with your personal affairs. A few more tips here. So work with a professional to set up your chart of accounts. Figure out what matters to you so that you can get the right balance in place and really measure what matters. Now, the reason I say work with a professional on this is because really I've always found that no two clinics are the same. Objectives are different. What you may care to measure may be different than somebody else. So talk to a professional and get it set up in a way that is not too granular because then it becomes hard to manage, but also not too high level that it doesn't help you understand what you want to understand from your financial statements. Measure cost of sales by product line to help you identify where the business does best. This can be a great place to implement incentives. For instance, if you have a service line, or let's say you're not happy with your gross margin on product sales, you might want to incentivize your teams to sell products that have a higher profit margin. Talk to your friends. What are their margins like for the same products and services? I find that this does vary quite significantly when I look at our client base across the country. And so talking to people in a similar geographic location to you can be a really good way of understanding what makes sense or what you might want to aspire to or how you're doing. GST, HST filing. So we could probably do a whole webinar on this. And just to be clear, I'm not a subject matter expert on this, but I do have some experience with it. The challenge in GST, HST filings is the result of having a combination of taxable and exempt sales. In a lot of businesses, all sales are taxable. You can claim GST, HST on anything paid, and it just flows right through QuickBooks. You press a button, and there's the amount that you put into your GST return. It doesn't necessarily work that way with a clinic. Often you have to take a pro rata methodology. A few acceptable methodologies that or one that we see a lot, the Canada Revenue Agency will accept is the square footage or a proportion of taxable versus exempt sales. Work with a professional to make sure that the methodology you apply will maximize your input tax credits and keep you compliant. So again, here I would say this is a place where you want to leverage a professional. You want to understand how best to do this so that you get it right and you remain compliant. Establish a clear billing process. Many of you, I'm sure, have felt the pain of not having a clear billing process, but you want to develop a clear policy for billing patients and insurance companies, ideally ASAP. Ensure all services are coded correctly according to medical coding standards. Send invoices out promptly after services are rendered. The number of times that I see professionals not sending out invoices quickly is quite alarming. And ultimately, the longer you take to send out that invoice, the harder it is to get paid. There's actually data on this out there. Implement an efficient follow-up system for overdue accounts. Set it in your calendar or have it in somebody's calendar. Make sure it's happening weekly or whatever you need to do in order to collect money fast. Provide detailed statements to patients explaining charges and payments, and train staff on billing procedures with compliance to ensure that you're compliant with insurance regulations. Monitor cash flow. So this has been a significant topic of discussion, I would say, over the past year as we've been facing some challenges economically. You want to regularly review cash flow statements to understand inflows and outflows. What you get out of, say, QuickBooks in terms of a cash flow statement is not necessarily the best tool, but it's at least something that is that can be generated automatically once your bookkeeping is complete. I would also suggest forecasting future cash flows to anticipate and address potential shortfalls. If you're in a seasonal business, for instance, you may find that you're having a great year, things are trucking along just great, and then you hit your slow month and suddenly you're out of cash. You want to have visibility on that before it happens. Maintain a cash reserve to cover unexpected expenses and emergencies. Of course, this is recommended, but of course, as business owners, we can from time to time be constrained here. Monitor the timing of income and expenses to optimize cash flow. Use cash flow management tools in your bookkeeping software for real-time insights. There are in QuickBooks some tools you can use to get better visibility. There are also third-party tools that you can implement that will help you take this further. And review and adjust financial strategies based on cash flow trends. So, you might have a way that you compensate yourself. It might be dividends. You might take money out of the company at different times based on what the cash flow needs of the business are. Now let's get into a case study. I'd like to tell you about one of our clients, Nose Creek Physiotherapy. So these are some of the questions that we asked Blair from Nose Creek Physiotherapy after he'd been working with us for a period of time. And I'll just tell you what his responses were and give you a little bit of background on his business so you can help to understand if what we did for Blair may apply to you. So his business is Calgary-based, founded in 2001, a fairly large-scale operation with over 10 wellness practitioners. His services include physiotherapy, registered massage therapy, traditional Chinese medicine, and acupuncture. And he has grown significantly in the past decade, having gone from 1,200 square feet to 3,600 square feet. The challenges that Blair had before he started working with us, he started working with us just towards the end of COVID, but during COVID, the question was how to stay afloat. He had an expensive bookkeeper who really had less work due to COVID and inefficiencies in bookkeeping functions that he articulated to me when we initially spoke in receipt management, reporting, and visibility. So things were done in a very traditional way. Prior to when he started working with us, where his bookkeeper would come into the office. During COVID, that became hard. So some things became, remote, but he really lacked in these three areas. So what we did for Blair and Nose Creek Physiotherapy is we provided an all-inclusive service at a lower rate than he was paying before. Bookkeeping and payroll are the services that we still support Blair with today. He has a modern technology stack, the technology stack that I referred to on that previous slide. Time-tested processes. So it's not really all about just implementing the tools, setting it and forgetting it. A lot of what we do for our clients is we implement our best practices, workflows, and processes. And that's a source of significant value when you consider a busy clinic and they have established ways of doing things. What are the things that they need to consider to do differently to leverage automation? And we can help with those questions. We were able to provide financial clarity and visibility. Today, Blair is able to make better decisions, understands his expenses better, and has an understanding as to how he can generate higher profit margins. Because as I was talking about earlier, we provide fairly granular reporting and revenues and expenses so that he can understand his gross margin by product. This is a quote from Blair. I won't read it out, but you can read it on the slide here. And really, we have many other stories like this. But ultimately, the bookkeeping for clinics, it can be complex, it can be cumbersome. To the extent that we can take it off of you and give you a set of monthly financial statements, it will put your mind at ease and really give you control of your finances. So when is it time to consider outsourcing? This question comes up a lot, but really when you have a lack of in-house expertise, and I find, no clinic owner that I've ever met got into this business to do their books. Limited resources, so time and capacity or priorities, time efficiency. So ultimately, if you hire a professional, somebody who can do it uh, well the first time, it's going to save you time. Recruitment challenges. Many clinics really don't have a place for a full-time bookkeeper or an accounting team. And so hiring somebody is a really challenging task. And so when you think about outsourcing somebody who's doing this kind of work for many other similar businesses, you can benefit from the experience, the best practices, but also just being able to buy a fraction of their time. Scalability. Many of our clients are opening new businesses, adding product lines. We just had a client add a gym to their operations. When you grow, your bookkeeping needs will also change and increase with greater volume. When you outsource, it's much easier to scale up that service than if you have the function managed internally. And also challenges with existing people, processes, and technology. Sometimes you just can't get it right. You don't know what the best technology is. You don't know how the tool should be used. So maybe it's time to leave that to somebody else. I get this question a lot. How much should it cost? So whether you engage Enkel or not, there's no simple answer to this. There are really many variables. Some of the variables specific to your industry would be, of course, well, how many transactions do you have? The more revenue you have generally means more billing, more expenses, more transactions. Multidisciplinary clinics, of course, there's more to measure in there. It's a little bit harder to do. That can impact the pricing. Complexity in your chart of accounts. So if you want to measure more, we have many of our clients who are interested in departmental reporting, for instance. You want to understand, for instance, what sales and marketing, what their costs look like. The more breaking out that you do, the more challenging it becomes. Frequency of your sales tax filings. So you may be annual, you may be quarterly, or you may be monthly. That just means getting in there and doing the work more frequently, filing more frequently. Also, in some provinces, you might have a PST obligation. That's additional filing. Intercompany transactions. So if you have a holding company or if you have another clinic that's in a separate company, intercompany transactions do create more complexity. And shareholder loan transactions. So when you put money in or take money out, that needs to be tracked very carefully, but it can also be confusing to manage for the bookkeeper. So that's something that can be more complex. Again, I want to reiterate, don't use your business as a bank account. Keep your business credit cards and bank accounts separate. So if you want to work with us, what will you get? You will get monthly financial statements that help you understand business performance. It is our brand promise to give you monthly financial statements. We don't really believe in another frequency. We don't believe in giving you quarterly statements. We believe that every business owner needs visibility on their books every month. GST, HST filings that are CRA compliance and help you maximize on your input tax credits. And also having your year-end documents ready to go for your CPA. In our view, really 1 month after year-end, you should have your bookkeeping completely wrapped up and off to your CPA, which is going to mean that your tax return can be filed on time, you can make your tax payments on time, and avoid interest and late filing penalties. In terms of pricing, I wanted to give you a little bit of an idea of what it might look like if you worked with Enkel. So if you are a clinic with less than 250,000 of revenue, it could start at $500 a month, 250 to 500,000, about 700, 500,000 to a million, 900. If you're over a million or you have multiple clinics, it's probably something we need to talk about in more detail. Catch-up bookkeeping, we can also assist with. Many clinics that we start working with, before they work with us, they just do their bookkeeping annually so that they can get their taxes filed. You may be almost a full year behind. That is fine. We can get you caught up. We can also provide payroll services, or we can help you implement a payroll processing system that will work really well for your business. And we can talk about that. Your pricing, so all of the pricing that I've quoted above includes your Dext and QuickBooks Online subscriptions. So that has about $100 in value right there. We're about ready to jump into questions. We did prepare a guide, a resource for you for all of the attendees today, a clinic's guide to financial success, some of our accounting best practices. You can download it at this link, and the Jane team will also make it available to you after this webinar. Thank you so much for having me today. I really appreciate your time and attention and look forward to answering your questions.
Thanks, Omar. So I think we have some questions from the community that we'd love to jump into.
Great.
So one of the ones that we saw was, can you provide some guidance on how much to maintain in terms of cash reserves, in terms of months or something else?
So I really don't like the answer, this depends, but it does depend to some extent. It depends on your risk tolerance. It depends on how much your cash flow can vary. As a rule of thumb, though, I would say that you want to have 3 months of operating expenses available. That's what a little bit of judgment there, to be honest with you, but that's a number that I feel comfortable with, and that I find most of our clients feel is the right place to be. So 3 months of operating expenses. So think about what your rent is, what your salaries are. Assume you have no revenue. What is that total? You can get it if your bookkeeping records are clear. That's what I would suggest at a minimum.
Great. And then there was another question about how to manage and store receipts effectively. So I think you had mentioned like a tool or a program that people can use. Are there any other ones that you would recommend, or what's the best way for people to do that?
So if you're like me, a filing cabinet is not an option. And so a tool like Dext, I'll just speak to Dext, but there are other tools that will do similar, a similar type of tracking. So you can snap a photo of a receipt, you can email forward an invoice, and it will hold on to your receipts. It creates a backup. The added benefit of something like Dext, but there are other tools that do this as well. They'll also push a copy of that invoice or receipt into your accounting software and keep it right next to the transaction. So if you ever get audited, the way an audit goes is they're going to say, give me your general ledger. They're going to start picking expenses that they want to see support for. It's really easy to just click into that transaction, download the invoice or receipt, and send it off to the CRA.
Nice. And then there was a follow-up question to your recommendation with the different types of, or the 2 credit cards. And so Susan asked, if we're able to use one credit card for both personal and business expenses and keep good track of transactions, then we're good to proceed. Any other risks to be aware of? So you recommended 2 different credit cards, but if they were able to use one and not confuse it, are there any other risks, or is that just something that really people should be avoiding?
So there's a couple of levers here. So one, I find having your business information kept separately is valuable. If you ever get audited, you can just provide that one statement to the CRA. But also, by having separate business credit cards, you can then reconcile that credit card statement in your QuickBooks or whatever accounting software you're using every month. And there's this concept of completeness. You've caught everything, right? I understand that it can be challenging, but I'd strongly recommend it.
Excellent. And then Anne has asked, can you explain the difference between HST quick method and regular filing?
Yeah, so and again, I'm not an expert here. The quick method allows you to just rely on certain percentages and you don't really have to do any bookkeeping around it. Now, the downside of it is um, the quick method and just like the standard method, correct? That was the question.
Yeah.
The standard method, you're actually picking up GST, HST on every transaction, so um, it's a more accurate number. It tends to yield a better result for you going that route.
Mm-hmm. Excellent. I'm just scrolling through the Q&A to see if there are any other questions. Did we already ask this one? So Julie asked, what is the general percentage that's of that small operations should keep aside for taxes?
So it depends on which taxes you're speaking about, whether it's like payroll taxes. So one, if it's payroll taxes, my strong recommendation is that you don't mess with it. You process payroll, you remit those taxes to the CRA. If you're using an automated payroll service, it will automatically pull those and send them off to the CRA. Don't use those as like float, because when you don't pay your payroll taxes on time, the interest and penalties are just too high. It's a very expensive form of financing. If it is income taxes and you are eligible for the small business deduction, effectively net income times, I think the current small business deduction rate is around 13% or thereabout. Really that could be a proxy for what you need to put aside for taxes. If you are not incorporated, let's say you're a sole proprietor, a little bit harder because of course we have marginal tax rates to figure out. So that's something um, you can find calculators online that will say, at $100,000 of profit, how much will my tax obligation be? That's one way, or talk to your accountant and have them actually put it in a personal tax return and run the numbers just to test it out.
Mhm. Excellent. I've seen a couple questions in the chat, people asking what AR is referring to, and I believe that that's referring to accounts receivable, which a bunch of people have just popped into the chat, so that's helpful. It's one of the things that we talk about sometimes at Jane, is like making sure we're not only just using the acronyms and talking about the
Sorry
the
about
full
that.
details. No, that's okay. Other software recommendations aside from QuickBooks, are there any other ones you'd recommend people look into?
Um, so there are other ones that will work well. Xero is another one that works well. HubDoc is another expense management tool. I see somebody just put Wave accounting up here. I don't have experience with Wave, but I understand that it would work. So there are other options. We use QuickBooks Online extensively. Having looked at the market, we find it to be the best one on sort of a cost benefit basis.
I think we have maybe two more questions we can get to. So Anne Marie asked, is it more or less complicated to have subcontractors versus employees? And what are the tax implications and pros and cons to each? I feel like that's probably a pretty detailed question, but is there anything that you can share with Valerie or Anne Marie on that?
I'll give you some really high level information, but please contact a professional on this one, um, because it's not really your decision as to whether somebody is considered an employee or contractor. There are a series of tests um, that you need to consider before you can consider somebody a contractor, or if you need to consider them to be an employee. The general preference is to consider people to be a contractor. You don't have CPP and EI. They bill you on, let's say, an hourly basis. You pay them. You also don't have a lot of the obligations that or the employment standards, for instance. A lot of that administration is not required. Now, the uh, so you can have both in your business. The general preference, again, from a tax perspective, is to have contractors. But again, it is a question of a question of fact. Somebody just posted here. I was hoping that would happen. The CRA guide on employees versus contractors. Have a look at that one. That is a very useful resource. Thank you, Lori, for that one.
Excellent. And I think there was one more I want to get to, Valerie's. So she said, what is something we should ask or look for when trying to find a CPA that is a good fit for a small clinic or business?
Yeah, so one, liking the person, trusting the person is really important. I think looking for somebody with experience, so somebody that's worked with your type of business before and understands the issues, that's one of the most important qualities that I would look for.